Coming up on Business Incorporated. Ghana, Egypt, tie worst performing markets with returns, negative 32% in Africa ranking. Kenya set to restart cooking gas subsidy plan with 60,000 cylinders. The Tanzanian government proposes a reduction levy for mobile money by 43%. Hello, welcome to the program. I'm Ladi Williams. First off, let's take a look at how your money is performing at intraday. Starting in Africa, Nigeria's main index was down marginally, but it looks like it could turn green before the end of the trading session. And South Africa's benchmark index was down 0.14%. Elsewhere, Egypt's index traded lower by 1.01%, while the Nairobi Stock Exchange closed Wednesday negative, down 1.49%, still staying in that negative territory. And now moving over to the Middle East, the Abu Dhabi index dipped 0.62%, while the Dubai index goes deeper down over 1%. Still within the region, Saudi Arabia's index dived 0.11%, while the Qatari index dropped by 1.59%. We see big losses across board in that market. Still, rising inflation triggering losses in most of these markets. Let's move on to Europe now. We see Germany trigger the alarm stage of its emergency gas plan today in response to a drop in Russian supplies. Let's get more now from Chris Colbert right there in Berlin. Great to have you, Chris. So I guess Germany is feeling the gas pressure right now.
Not only that, Germany is in a gas crisis. The country's vice chancellor and economy minister Robert Habeck said earlier today, Russia's reduction of gas flowing to Germany is an economic attack, he said. Moscow has in the past days significantly reduced the flow of gas to Germany, and even if the country does not rely on Russian gas as heavily as it used to, there still is a need for natural gas from Russia to keep the German economy running and German households warm. Now, amid this situation, Germany triggered phase 1 of its emergency plan at the end of March. It includes stricter monitoring of daily flows and a focus on filling gas storage facilities. A move to phase 2 has been the subject of speculation since Russian supplier Gazprom cut flows via the Nord Stream pipeline to just 40% of capacity last week, blaming equipment that cannot be sent because of sanctions. Now, Germany and its EU partners are not buying the argument, saying the reduction of flows is meant to punish the West for its support of Ukraine. And it is unclear how long the situation of reduced gas deliveries through Nord Stream will last. Now, Germany's Federal Network Agency so far has said that the situation is tense, but gas supplies to Germany are stable.
Right, and what does this alarm stage, what does this plan entail?
This phase 2 alarm stage, as it's called, is planned for when the government sees a high risk of long-term supply shortages of gas. In this stage, the market is still able to absorb missing volume without the need for state intervention that would kick in the final emergency stage. But the move allows for serious consequences, mainly that it allows utilities to pass on rising energy costs to their customers, namely households and companies, and thereby help to lower demand. However, this particular clause will not be triggered yet because only one of the 2 necessary conditions are fulfilled. So phase 1 or phase 2 of the emergency plan have been declared. That is condition number 1. What is missing is the thumbs up from the Federal Network Agency, which is Germany's regulatory office for electricity, gas, telecommunications, post and railway markets. It needs to declare that there's a significant reduction of imported gas volumes. And that's something that the agency hasn't seen so far, and only after it does declare it, energy companies are allowed to lift prices to an appropriate level as the law states it. Currently, Germany's gas storage facilities are around 60% full, and they gradually continue to be filled up further. That's also because consumption is lower. Summer has kicked in here in Europe, and people don't need to heat their homes. So this 60% capacity is a bit lower than the 5-year average, but higher than last year's average. Germany as a whole needs to rely, if Germany were to rely on the 60%, they would probably last for about 37 days to power the country if consumption would be similar to the average of the past 5 days. Now, Mr. Habeck reiterated today that Germany is looking for alternative suppliers. It's expanding the use of renewable energies and to bring down consumption. Now, in order to do particularly the latter, the government is looking at all the legal ways possible, Mr. Habeck had said earlier.
I guess the focus on gas continues right there in Europe, but stocks came under pressure again yesterday. What does today's trading session look like?
Equity markets remain under pressure, with Germany's blue chips index DAX losing around 1% in the early hours of trading. Investors having to digest the news of Germany raising its gas alert level and also focusing on the sentiment among European purchases managers, which has gotten more clouded this month. And the head of the U.S. Federal Reserve adding to the somber mood when he said on Wednesday that even though the U.S. economy was strong, a recession as a result of rapidly rising interest rates would, quote, surely be an option, and managing a soft landing would be a challenge.
Right. Everyone looking for that soft landing. Thank you so much, Chris Koba, right there in Berlin. Let's head on to the UK now with conversations about online sales tax. There we have Juliana there standing by. Great to have you, Juliana. So the world's biggest internet retailer has warned the UK government that an online sales tax would cause significant harm to Britain's army of small businesses. What's the government saying now?
Good afternoon, Laddie. I think government appetite of introducing an online sales tax has ebbed and flowed over the past few years. Of course, it peaked during the pandemic because bricks and mortar stores had to close, and they really suffered during those 2 years of lockdown restrictions. And of course, we know online firms were strengthened because everybody was shopping online. But a conversation has begun again, consultation between the Treasury and big online stores. So Amazon UK, Just Eat Takeaway, and eBay, they joined other bosses around the table, and they were discussing what an online tax would look like. And then, yes, John Humphreys, who is the country manager for Amazon UK, he said, look, you know, hold your horses. If you are to do this, forget about us. What about the 200,000 small to medium-sized businesses that sell on Amazon UK? They are the kind of people that are going to be suffered. And I think you are starting to get the sense from retailers in the UK that perhaps if there is going to be an overhaul of retailers and tax, it shouldn't be focused on this online tax. It should more be focused on business rates. And it's business rates that have really been crippling high street stores up and down the UK. People are just not consuming the way they were consuming. Yes, people have flooded back to the high streets, but people are feeling more comfortable buying from home. So retailers just don't think it's fair that the old-fashioned business rate system is still in place. So rather than the government focusing on trying to get money back into the coffers by charging people for being online, I think bricks and mortar retailers want the government to start looking at the business rate system. So anybody like Gorillas, like Getir, like Amazon, who are able to have really big warehouses and pretty much not pay any tax on it, that's what I think retailers generally in the UK would like to see the government spend more of their time on.
Right, as government's trying to push for more revenue at this time. But I see the FCA is in the news. They fined Ghana International Bank about £5.8 million for failings in its anti-money laundering controls. What are you hearing about this?
Yeah, not a great story for Ghana International Bank, but there is an important statement. I'll just read the first sentence from the FCA, which is the Financial Conduct Authority. They are the regulator that looks after what's happening with people's money. They say there is no evidence of actual money laundering detected in GIB. This is all about third-party lenders who Ghana International Bank had used for several years to offer services and new payment products for their customers. Now, what the FCA have concluded is that between January 2012 and December 2016, Ghana International Bank did not adequately perform anti-money laundering checks. So even though no evidence was found, when the FCA did visit Ghana International Bank in the UK in 2016, they found that the systems that they had in place, not within the bank, but within the third-party lenders that they were using, they just wasn't doing their due diligence. I believe as soon as the FCA did flag this in 2016, GIB said they're not going to take on any new customers. They haven't been doing that thus far, but in this long-running probe, they have found them to be liable for not making sure they were making sure that the T's were crossed and the I's were dotted. So they've received this monumental fine. Not great for them.
Right. I guess you always have to make those checks regardless. But how the market's looking today? I guess the trading week is almost coming to an end. We normally see sell-offs. How's it looking at intraday over there?
Yeah, it's not bad, actually. It was in the red this morning. It's picked up a little bit, and this is despite all of the gloomy data. We got that data from the Office for National Statistics this morning showing that government debt is being really crippled because of inflation. Inflation incredibly high at the moment, but government debt is not serviced on the CPI, the Consumer Price Index. It's on RPI, the Retail Price Index, and that's much higher at 11%. So government debt bills are piling up. And then as well, fuel back in the spotlight over the past week. The price of a litre of petrol has risen about nearly 3 pence. So people are really suffering there. And then we got some flash PMI data earlier this morning showing that the private sector was pretty much flat month on month between April and May. So not good reading, but investors seem to be a little bit optimistic. The FTSE All-Share in intraday is up 0.13%. FTSE 100 up 2 by 0.33%. And the FTSE 250, the domestic market, that's down at intraday by 0.31%. In the currencies market, the British pound is currently trading down on the US dollar by 0.36%, though it's up against the euro by 0.25%, but down at intraday on the Japanese yen by 0.81%, Laddie.
All right, can't wait to see a bullish market again. Don't know when we're going to see that happen. Thank you so much, Juliana. All right, now let's take a look at what's happening in Asia. We see Chinese stocks led gains in mixed trading session today as Asia-Pacific investors continue to monitor recession concerns. Mainland Chinese markets struggled for direction initially, but closed in the green. The Shenzhen component jumped about 2.19% to close at 12,514 points, while the Shanghai composite was up 1.62% at 3,320 points. Hong Kong's Hang Seng Index briefly rose 2%. Then closed 1.26% higher at about 21,273 points, and the Hang Seng Tech Index gained 2.28%. See, Alibaba there jumped about 6.4%, while Xpeng spiked nearly 10%. In Japan, the Nikkei 225 was mildly higher at 26,171 points, while the Topix Index declined fractionally to close at 1,851 points. And over to the U.S. now. We see stock futures rose today as the market tried to recover some of the steep losses suffered in 2022. Futures tied to the S&P 500 traded 0.7% higher, while the Dow Jones Industrial Average futures were up 0.72%, while the Nasdaq 100 rose about 1%. The major averages came into today's session rising strong. We see gains from S&P 500 and Nasdaq Composite were up and 2% at that time, while the Dow had risen nearly 2%. So the stocks closed slightly lower as on Wednesday as investors weighed the likelihood of a recession. The Federal Reserve Chair Jerome Powell told Congress the central bank is strongly committed to bringing down inflation. He also notes that a recession is a possibility, a fear that has continued to weigh on Wall Street. All right, we'll take a break now. When we come back, commodities market update is next. To stay with us, this is Business Incorporated. Welcome back. Well, the war in Ukraine has caused serious disruptions to the global timber trade, with international sanctions imposed over Moscow's invasion of Ukraine has curbed timber supplies from Russia and Belarus, while the conflict has severely hampered production in Ukraine. According to industry figures, these three countries accounted for a quarter of worldwide timber in 2021. Fears are rising that illegal logging will meet demand as environmental protections are loosened and sanctions curb Russian exports. Let's talk to Maya Waige now, analyst of financial derivatives company, joining us right there. Great to have you, Maya.
Hello, Ladi. Good afternoon. Thank you for having me.
Yeah, so what are the possible risks associated with this illegal lumbering we're seeing on the rise now?
Well, there are quite a number of risks, right, associated with illegal lumbering, but I think chief amongst these risks is the environmental risk, right? If illegal felling of trees leads to loss of biodiversity, deforestation, and climate change. Climate change has become a very huge problem for the world in this time, right? So we have illegal felling of trees leading to deforestation. Already 80% of the world's forests have been destroyed, right? And then the remaining 20% will be affected by a rise in illegal logging. And then you also have loss of biodiversity. We already have creatures that are going into extinction. And then even some of this extinction is as a result of people destroying their natural habitat and these creatures coming into the urban areas and then being killed by humans. And so we're having loss of that. And also deforestation accounts for about 11% of CO2 emissions globally. And this is a major chief cause of climate change. We're experiencing erosion in different places, floods and even wildfires. And this is as a result of deforestation. Other risks involved are one, we have the economic risk. We'll have governments losing part of their revenue. The governments could lose about 10 to 15 billion dollars globally as a result of illegal logging. Then you have even poor nations that get taxes and all of associated costs from lumbering. They would lose out on this because the people doing this illegal lumbering are not channeling it through the government. So the government will be losing on that end too. And then lastly, we would see the social impact, right? A lot of the people in the rural areas will be affected. We will see a drop in the standard of living of these people. So these are some of the risks associated. And then also you have governments, especially in the EU, loosening environmental protection policies. And this is also adding to these risks. And it goes against what global leaders said at the COP26 last year, where they pledged to actually reduce deforestation by 2030.
Right. Well, we're seeing a lot of pledges that are not really working out at this time. Well, we've seen the lumber prices are down about 47% year to date and off about 65% from the 2021 highs that we actually saw. But, you know, with all of this supply disruptions, how come the price is still falling?
Well, I think we need to go back to the beginning of the hike when lumber prices started skyrocketing. What happened at the beginning of the pandemic? We saw a couple of things happen. One of which we saw lumber producers reduce their production, or some even stop production, and this led to a shortage in supply. Two, we saw an increase in housing demand, especially as people were home. You had a drop in mortgage rates, which actually attracted people into the housing market. There was a rise in DIY renovations. People were at home, they weren't going out. They had more money in their hand because in the US, for instance, there was the stimulus check. So people had more money to do the DIY. They were creating home offices and all of that. So we saw increased demand for housing and and wood products. And then also we also saw also these things led to a rise in prices in demand for housing. We saw housing prices skyrocket in the US as high as 42%, right? And so these things happened, and then as time went on, we saw ease of COVID restrictions, we saw economic activities pick up, we still had the supply chain constraint, and these things led to inflation. And so what have global governments around the world done to reduce inflation? They have decided to tighten monetary policy by increasing interest rates, and this has affected mortgage rates, right? And these things have, the soaring prices, the high mortgage rates have actually led to a cooling down of the housing market. The decline of house sales and new houses, old houses has actually, we've seen a decline in number of sales in the housing sector. And so these things have actually led to lumber buyers reducing their purchases. So you have some sawmillers, the producers, having more increase in their inventories. And so to get their inventories out on time, they have started slashing prices. And so this is why we have seen the prices of lumber fall in recent times.
Quite interesting. But data from the Global Forest Watch shows that Nigeria lost about 1.14 million hectares of tree cover, equivalent to about 11% decrease in trees cover since 2000, and equal to about 587 million tons of carbon dioxide emissions from about 2001 to 2021. So I'm wondering what steps can be taken to lower this amount of deforestation, happening, to just curb and lower that what we're seeing right now with deforestation.
Well, I think that before we go into solutions, we need to know what the root cause is. If you don't know the root cause, you don't really know the right solutions to prefer, right, to the issue. And then Nigeria, we're one of the top 3 countries with the highest deforestation rate. And the reason for this is mainly 2 reasons. We have mainly 2 reasons for this. One is poverty, right? There was a report from the World Economic Forum that actually showed that poverty was the leading cause of deforestation in Nigeria, right? And then we know that in Nigeria, 4 in 10 people live below the poverty line. And then number 2, we have ignorance. A lot of the people involved in these activities are ignorant. They don't know the impact of their activities. They don't know what their illegal felling of trees is doing to the environment. So they have no idea of it. So these are the 2 major reasons why we have a very high rate of deforestation in the country. So to curb this problem, the government has to do a couple of things. I think some of the things that they can do is, one, the government actually has to raise awareness, especially to the public and especially to people in the areas where this problem is prevalent, Cross River, Ondo, Ekiti, those forest areas. They need to raise awareness to people, let them see in simple and relatable language how their activities are affecting their lives, climate, their farming. Let them see so they can understand. Then number 2, the government actually has to give incentives and look at, they need to look at, should we say, reforestation, and give incentives for that, to encourage people that, okay, even if you're going to, because people will cut trees, they need to eat. So even if you cut trees, replant them. Okay, if you cut one, replant maybe 5 to 10 trees. If you replant, you take, this is what you get for it. Incentive to encourage people to replant what they actually cut. And then also policies. Yes, the government has environmental policies, but then implementation is a big issue. And also maybe we also need to put policies, specific policies, to stop the felling of immature trees so they even have a chance to grow. And these things have to be implemented. And I think lastly, the government needs to involve the public, especially the communities that are around these forest areas. A study shows that in Nepal, this was actually done, and it reduced deforestation by about 37%.
Right, quite a lot for all of us to do to make this deforestation actually end. And, well, the incentives actually sound pretty good for afforestation. Thank you so much, Maya Waige, an analyst at Financial Commodities, right there, joining us on the program. Thank you so much.
Welcome.
All right, now let's move on to other stories. See, Ghana and Egypt tied as the worst performing markets with returns of negative 32% in ranking that put the Nigeria Stock Exchange as a top performer, 21% returns. That's yet today we've seen on the NGX. And the Nairobi Bourse is the third worst performing major stock market in Africa since January, hit by foreign investor capital flight and ease of repatriation of equity sales compared to other capitals in the continent. The performance of African stock markets recently been weighed down by a reduced appetite for emerging markets, so a jump in interest rates in the developed markets such as the U.S., which are currently battling high inflation that's forced central bankers to adjust rates upwards. This flight of capital to the U.S. market, where inflation is at a 40-year high of 8.6%, and other developed nations have triggered steep price falls of African blue-chip firms listed that are favorite of the foreign investors. And that's it on Business Incorporated. Thank you for watching. I'm Ladi Williams. Bye for now.